The FOMC report is out and the S&P 500 is going higher, guys. Let's dive into exactly what this report says. We're going to read it. It's pretty short, and then we're going to get into the important things that are happening on the day. We do have Fed Jerome Powell that speaks in about 30 minutes time, a little bit after this video will be posted. I'm posting this now because the report is important. Fed Jerome Powell is more important, so I want to focus on that in the video to wrap up the trading day. You also have Facebook earnings in after hours. And also, AMC's cost of borrow rates are over 500%. So we have a lot to talk about. Let's get into it, guys. So the Fed report says recent indicators point to modest growth in spending and production. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation has eased somewhat, but remains elevated. They took out reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. They took that part out. So all they said was inflation has eased somewhat but remains elevated. Russia's war against Ukraine is causing tremendous human and economic hardship. They took out the war and said, and contributing to upward pressure on inflation and are weighing on elevated global uncertainty. The committee is highly attentive to inflation risks. So they did add in here that there's elevated global uncertainty and took out the upward pressure on inflation due to the war itself. So they're kind of acknowledging the global uncertainty, but not saying it's because of the war at this point. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to raise the target range for the federal funds rate to 4.5% to 4.75%. The committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. This is the big part of the statement that gave you an initial bearish reaction, is the ongoing rate hikes. The analysts before this comes out, because there's like an analyst barrage of their comments that comes out at 1:45 p.m. right before that 2 p.m. report does come out. And what they were all looking for is that right there, ongoing rate hikes, because we're kind of expecting at this point there to be one more rate hike and then to be over with. Ongoing rate hikes suggest 1, 2, 3. It suggests more than one final rate hike. So that is what gave you that initial drop off of the report. And that's going to be the thing that Fed Jerome Powell elaborates on at 2:30 that can really drive the markets from here. And I think he wants to get the stock market down because you have eased financial conditions to the same point as a year ago. So go back to when the Fed was just starting to raise rates. Financial conditions are basically the same now as they were then. So all of the rate hikes throughout 2022, all of the tightening of financial conditions has basically went away with the bond markets rallying, right, with the stock market rallying and interest rates going down a little bit. So that is the biggest part of the statement. It says, in determining the pace, or they change pace and put in extent of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags in which monetary policy affects economic activity and inflation, and economic and financial developments. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. As described, this is what they took out in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. Its previously announced plan. So basically just saying they're going to keep reducing the balance sheet. That's essentially what that means in English. And they also did not see any dissents for raising rates. So everyone was in unanimous agreement that they should raise rates 25 basis points. Now, the conference here is going to actually be more important because Powell's going to elaborate on that. He's going to elaborate on ongoing rate hikes. That's going to be a key. Keep that in your mind. If you want to know if this market's going to be bullish or bearish, It's the ongoing rate hikes. Does the Fed signal more than one more rate hike? Do they dodge the question, or do they just flat out say, you know, we're going to need at least a couple more rate hikes? That's going to be huge, and that could really dictate how the markets do trade for really the rest of the day today, as well as for tomorrow. Now, today and after hours, you are going to get Facebook that reports earnings, and Facebook has been doing remarkably well over the last couple of months. If you go ahead and pull up Facebook's chart, or even just look at the stock right now, it's basically straight up. Same thing ever since they reported earnings back here in late October. The chart's been pretty much straight up. And from this perspective right here, you know, Snapchat's down 14%. Advertising does not look that good right now. So Facebook really needs to pull a rabbit out of the hat, for lack of a better word. They need to give the market something very exciting and really reduce cost, at the same time increasing profits and revenue. If that does not happen, it's going to set you up for a pretty miserable day tomorrow. Even that, considering you have more economic data coming out tomorrow, and the big dogs, Amazon, Apple, and Google. So at the FOMC press conference, we are going to go over everything you need to know as far as the important statements, and not important to me, I mean important to the markets, in the next video. So you want to stay tuned for that, because this initial reaction that you kind of got that drop and now you're getting a rip, it can fool you out a lot. Over the past Fed meetings we've seen throughout 2022, it has produced an average 1 week return of negative 4.5% after Fed meetings. So it's really going to be important what Fed Jerome Powell says. And like I said, with Facebook earnings and after hours, it's going to set you up for a very violent day coming tomorrow. But I think more important than the Fed, more important than the economic data, is going to be earnings. So Apple earnings more specifically, because they are 7% of the S&P alone, over 10% of the NASDAQ, whereas Amazon's about 3% of the S&P and about 5% of the NASDAQ. So both of these companies, and Google's pretty comparable to Amazon as far as market weighting. So all in all, these companies, 7%, 5%, or 7%, 3%, 3%. That's about 13% of the S&P that will be reporting earnings just tomorrow in after hours with these three companies. That is over 15% of the NASDAQ that will be reporting earnings, close to about 20% market weighting in the NASDAQ. So needless to say, it's going to be huge for this market and where we are currently at, because you're at really a breakout level, right? If all things go good today, and we're still like 15 minutes off of Fed Jerome Powell and his press conference, if all things go good here, you're at a major resistance level. If you don't get batted down and you do rally from here and earnings are okay, guys, you are going to be in a new bull market for 2023. I think you're kind of already in a bull market for 2023, but it would be more confirmation that you could go a little bit more on the long side here, because earnings, that's going to be the thing that really can bat down this market in 2023. Now, as far as economic data coming out tomorrow, you have initial jobless claims, non-farm productivity, unit labor costs, some employment data that could, you know, help or hurt the markets depending on if there's wage inflation incorporated in that. I don't really expect that to be big really at all, just compared to Fed Jerome Powell today. He is really going to dominate the markets until we get those three big earnings on Thursday. And then on Friday, you are going to get the unemployment rate. Let's go ahead and pull it up. The unemployment rate for January and the non-farm payrolls for January. That's going to be a little bit more important. And then coming out at 10 o'clock, the ISM non-manufacturing PMI. Now let's switch gears and talk about AMC here just for a brief minute, because the cost to borrow max is at 515.5%. 500% plus. That's ridiculous. That is stupidly high for apparently no reason, right? If people are so convinced that AMC is going down, why are the cost of borrow rates 515%? Why do people not want to come off of their shares? Makes you wonder. Cost to borrow average of 398.5%. Cost to borrow minimum at about 85% as well. The live short interest of free float sitting at about 23%, and the amount of shares sold short at 118.25 million. So the numbers really across the board look very healthy, look primed for a short squeeze. I would much rather be long an AMC with these numbers than obviously be short AMC with these numbers. And especially right now, the markets want to be bullish. Like they're trying so hard to be bullish and continue to go up. That's why the start of 2023 has been so good. And I do think it feeds off into AMC. I think there's still that risk, though, of earnings. And once earnings is out of the way, I think that could really set you up for shorts covering in a big way. Or if AMC flops earnings, well, they'll get what they deserve and the stock will go down, right? You need to perform on earnings in 2023 or you will not be rewarded. And it will be bloody, guys. So definitely some good numbers we're seeing over here as far as the option activity. 5% order. Positive order value, 34 orders totaling $19.2 million. Not so good there. Let's go ahead and take a look at AMC and pull up this widget. It's actually the option statistics. This one's pretty cool, actually. Go ahead and pull up. I don't know why it's not staying on the screen, though. Go ahead and pull up AMC. And we'll take a look at some of the most active strikes on AMC and what's happening today. Oh my gosh. My apologies, guys. Option statistics. It's so fidgety. It's terrible. Oh my gosh. I'm totally gonna do it one more time. Because wow. Alright. Apologies, guys. So what we're seeing as far as the option activity today, the $10 strike is the most active, and you have seen 55.82 thousand contracts trading hands. This is the $10 strike across the whole entire option chain, so all of the different strikes or all of the different expirations. You have seen 32,500 calls, 23.28 thousand puts placed on AMC here today. And the total amount of calls is 172,000 that have been placed on AMC today. 128,000 puts that have been placed on AMC. Some of the more active strikes as well is the $5 strike with over 20,000 calls and puts trading hands here today. Pretty neutral overall. The third most actively traded strike is the $6 strike, and this one is heavily weighted to the call side. 37, almost 38,000 calls placed on the day for the call side, and 4,000 puts placed on the put side. The 350 strike is the fourth most heavily traded strike as well. 31,000 calls placed on the day and 8.35 thousand puts placed on the day. So you are seeing overwhelmingly high majority of the option activity on the most heavily traded strikes on AMC's option chain. Looking a lot more bullish than bearish here on the day, and I think that is a good sign considering the stock is up 3%, and you are actually back above your major squeeze level. This major squeeze level being at about $5.30 per share. AMC is at $5.48 per share. So especially if we do continue to get this bullish reaction when Fed Jerome Powell starts to speak, that's going to be huge for the markets. And that is really what I want to pay attention to, right? Heading into Facebook earnings, the Fed, the 1 week average return after the Fed is 4.5% negative. You could get a big positive reaction, especially if the Fed gives us things that the markets want to hear, and that could continue this rally. And odds are AMC would benefit greatly from a continued rally in the markets, guys. So there is everything for this video. The Fed does come on in about 6 minutes, so we are going to go ahead and get you guys this video as soon as possible and start listening to Fed Jerome Powell and get everything ready for you guys in the next video. So stay tuned for that one. The digestion of this Fed meeting will be big. It's the first Fed meeting in 2023, so I highly recommend you guys watch that video when it comes out later today. So that is it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, buckle up, baby. Buckle up, and I'll see you in the next one.